I promise you, by the end of this video, you will understand how profitable forex traders analyze the market from a plain chart into a full analyzed market. This is Chart Approach episode 5, and all I do on Chart Approach is show traders how to approach the market step by step like a professional forex trader. I don't want to waste your time. Let's go to the chart. Hello guys, welcome inside of my screen. I don't want to waste your time. Let us go straight to business. Now, this is AUDUSD, and I'm going to be doing a top-down analysis right from the higher time frame, which is the monthly time frame, down to the lowest time frame. Right now, the time frame which me personally use in entering my trade is the 4 hours time frame. Right, so I'm more into swing trading than day trading. Now I'm going to be showing you everything. I'm going to be showing you, if you're a day trader, you can also do it. If you're a swing trader, you can do it. If you're a scalper, you can do it as well. Right, every single forex trader does this. This is a plain chart. I have this pair analyzed before, but I have to like clean this chart so that you guys can see how it's done. Do you understand? So who am I? My name is Trader Chris. I've been trading for 4 years now. I've been profitably trading for 3 years now, and this is what I do. Now, this is Chart Approach episode 5. Quickly, this is AUDUSD. First off, you want to understand the time frame you are and what you should be doing on that time frame. Well, on the monthly time frame, which is the highest time frame, and what you should be doing on the monthly time frame is to understand the flow of the market, to understand the overall trend of this particular market, right? And you can see, without even being told, the overall trend of this market is a downtrend. Now, how do I know it's a downtrend? Simple, it's coming down. There are more of red candles. So quickly, what I'll do is that I want to also map out some key levels, right? Some key levels. There's a key level at this point here. How do I know there's a key level here? Because you can see like there are multiple touches at this point here. There's a support at this point, and there's a resistance here. So this level is a key level. So a key level is a level that if price gets to, it is most likely going to react to that particular level. So clone this. There's another level at this point. There's a level here. Now clone this. So there's a level at this point here, but I'm not adding it. Let me just put it. There's a level at this point here. As you can see, this level here. And you can see when price even got to this point, this part recently, it retested this level, try breaking it, but it was unable to break it. Now, this is a trending market because this market is coming down. So we'll try to like see if we can draw a trend. Do you understand? If we can draw a trend. So as you can see, this is a clean trend. This is a clean one. This is a clean one, right? This is a clean one. There are touches here. The market went, touched here, went up, touched here, went, touched here, and you see now the market is already coming down. And now you must understand that there's also a level at this point here. There's also a level at this point here, right? There's a level at this point here. There's even a level at this particular point, right? Because there's a what's it called? There's a touch at this point. So what you do is that you also put, let's say, okay, an horizontal line at this point. Put an horizontal line here, somewhere this point here. Yeah. So you put an horizontal line there. Okay, this is the full chart for this. So there's a touch at this point. So what you do is that you will map out your key levels, understand where this particular market is going. Now, as you can see, this market is coming down. From this point, it went down, created touches, fell down, and like retested the stuff and started coming down, right? And then you see this retracement continue coming down, and then retracement happened, came to the trend line, right? And then what you can see at this point here is that the market went to this particular level and come to this particular level. Now, if you check very well, this particular level now is what is currently happening in the forex market. Like this is what is currently happening from this point. This is the current stuff, right? This should be like from 2022, around 2022. If you see, so if you check where around 2022 to like 2025, this is what is currently happening here. The market went up, went down, went up, went down. Like what we want to know is that what is like all this thing that is looking like a range now, what's happening here, right? And how can we take advantage of this particular market? So we have mapped out these levels on our that's these major levels on our monthly time frame. So all right, so this is the weekly time frame, right? This is the weekly time frame, and this is what the chart is looking like on the weekly time frame. Now it's now giving more information. There are now more candles, and if you are not very careful, it might even confuse you. You understand? It might confuse you. This is what the chart is looking like on the weekly time frame, right? Now, okay, so what you do is that you want to map out some minor levels at this weekly time frame, if there is any. Like this now, you want to understand what is going on at this particular point here. Because this is your focus now, this is your main focus, right? This is your main focus, this particular market. Just understand that, oh, the market fell down, went up, went down, and then did some nonsense here, fell down, come down to this point, and then started going up at this point. Now it went down. Now, what you can see that it's going up. So it can even go up to this particular point. Do you understand? It can go up to this particular point. So what we should understand that we want to draw, like this market has fallen down already now. But first of all, we want to see how far this market is going to go up before it's coming down. Because this market, most certain it's coming down, right? It is coming down, most certain, right? It is coming down. Now, let's draw our fib retracement from this point Yeah, to this point. Now you can see that there's a level here, there's a minor level here that, oh, the market gets to that minor level, it might most likely react to the minor level, which is at this 50% retracement level, right? The 50% retracement level. So you just know that, okay, if the market gets to that particular level, it might likely retrace, right? So if the market gets to this particular level, to this point here, we should be looking for a retracement. But if it doesn't, or if it starts retracing from this level to the downside, it's still fine, right? All we want to do is that we want to understand the flow of the market, the direction it's going to. Do you understand? That's what we're here for, and take opportunity that's based on the reactions of the market. We are not here to force the market, oh, it must go this way or it must come the way. No. Do you understand? So what we'll do now is that that's the only level I'm mapping out for the weekly, right? Because the reason I'm mapping out just that level is because, as you can see, there are levels at this point though. There's level here, there's level at this point. Now I don't want to cloud my analysis with too much levels. Do you understand? Because there's a level here. Now, if I say this market is going to get to this zone, a level that it will get to before it gets to this zone is this particular level. Do you understand? And there's a level it will get to before it gets to this particular level. Is this particular? There's even a level at this point. That's where it's now making this thing. Understanding the market based on level will help you a lot. Listen, traders, understanding the market based on level will help you a lot in the forex market. Now, if I'm to clone this and say, okay, there's a level at this point, which there is, and the market is already respecting the level. As you can see, if the market breaks this level, here's the next level target. If the market succeeds in breaking this level, which this level is the 50% retracement, and the market, if it gets to this level, it might start falling to the downside. But if it succeeds and breaks this level, here's the next level target. You know, it can do a fake breakout and there's like 1-2 candles above and then start coming down to the upside. But there are sometimes that, oh, if you just break a full break and you see that the market is already coming to this point. Now, what I would advise is that since the overall flow of this market is a downtrend, right? The market, if you are to trade this market like this, you can see that the overall flow is a downtrend. Do you understand? And it is better to be selling in a downtrend. But you can see that this current trend now is that if you scale to the daily time frame, you can see that the current trend is a upward trend. Do you understand? It's an upward trend, right? Or it's turning to an upward trend. Because if you check this market very well, you can see that when market goes to this point, there was an high at this point here. So let's do this. Let me show you some things. There was an high at this point here. Let me make this a little bit thicker and clone. There was an high at that point here, and there was a low at this point. And the market fell down. Let me remove this. Take it off. And the market fell down to this particular point. So this was the highest point, the lowest point it got to, and then the market went up. It created an high at this point. Now we're working based on highs and lows now. And the market now, what the market did was, now after the market fell, it fell down to this particular point here, right? Fell to this particular point here, and then what happened next is the market fell to this point, and then this level I mapped out. That's where this stuff happened, like a break and then retest. As you can see, this particular high now. Now listen, based on the high and low, there's a high here, there's a low here. Let me use this stuff for it. There's a high at this point here. Then the market from this was the highest point it got to, then it started falling down to this point. This was the lowest point it got to before it started rejecting, and then created the high at this point. Then it broke this low, created the lower low, and then started going up again, created a high, which is this zone now that we are in, this 50% retracement zone. So this level now, it started falling down again, So understanding this level, all this level will help you a lot, because when it fell down, it fell down to this, let's say this particular point here, created a high. See, let me put my, what's it called here, fell down to this particular point, created a high at this point here. Let's see, this was the low it fell down to, right? There was a low at this point it fell down to, and there was a high at this particular point also. Now let me clone this. There was a high at this particular point, and this is very important to that for those of you that don't understand market structure. Market fell down, then went down to this particular point. Let me clone this as well. Went down to this particular point. This was the lowest point it got to, and now this lowest point now is the same low with this, like almost equal low. You just based on there's a wick at this level here, and then created this level here. Do you understand? It created this level at this point here. So just follow me step by step. Created this level at this point, went to this level, fell down, and then the market went up. This is the lowest point. Then when the market got to this point now, this is where change of trend happened. You know, the market was coming down before, creating lower lows and lower highs. And next, what happened next was that the market created a low, right? And now it was supposed to create a high at this point. but the market came, broke this level, and then it came to create a high at this point. Okay, fine. You created a high, and the high is higher than this previous high, which is this, right? Which is against the downtrend. Now, okay, you come now. Let's say that's a retracement for the downtrend. Let's give you benefit of that. You come now and take out this low. You understand? Take out this low here. You come now and take out this low here, but no, the market refused. It fell down and did this happen, boom, to the upside. This one was already a buy signal, double top, double bottom, like equal lows, right? Just forget this week. Equal lows, that's based on what we can see, right? And then it created a new high at this point. And I'm like, oh, now it has created an equal low, a high, a higher high. That's looking like an uptrend, bro. Do you get? It's looking like an uptrend. Then what you can see next is if this high it created here, it started falling down. Okay, fall down, sweep this low and this low. The market said no. The market decided to fall down to this particular point here. I just hope you guys understand this stuff now. Fell down to this particular point here. And you can see now this is where the market is currently now. So if this market breaks this level, this particular level, because there's a high at this point here, if it takes out this level, this is the next level target. Do you understand? This is the next level target. And if it breaks this level, here will be the next level. This trend line will be the next level target. And you can see there's a level at this trend line already. Do you understand? There's a level at this trend line already. There's a level at this trend line already. So let me just take this back instead. There's a level at that trend line already. Do you understand? So this one is now looking like an change of trend to the upside. You guys should follow me. I hope I'm taking you guys along. Like the market went up, fell down, then this stuff is happening. So how you now look for a trading opportunity, that's based on me and how I taught my students, is now to scale down to a lower time frame, like that stuff did not show. To scale down to the lower time frame, like the 4 hours time frame, right? So in the next chart push, I'm going to be showing you how you can enter this market. Now you can enter depending on your own market strategy. Some of you entry strategy, some of you can even scale down to a lower time frame, down to 15 minutes and enter your trade. You understand? The reason why I do swing trading, right, is because it is more profitable than day trading. You can argue with yourself on the comment section, but actually it is actually more profitable than day trading. Like it gives you peace of mind. No, you are trying to do this, you're trying to do this. People will be like, oh, you have to wait for a longer period of time. You are waiting. If I'm waiting for this particular pair, there are other pairs to be trading while waiting for a particular one to move. If other ones are moving anyhow, you will be trading this one. Do you understand? There are a lot of pairs, bro. You can be doing your swing trading. Swing trading is like the best type of trading you can be doing. But you can also be doing day trading as well, right? You can also be even some swing traders sometimes into day trading, right? This thing changes based on the market dynamics. There's some period that the market will not be very favorable for swing traders. You have to like adjust to day trading. Do you understand? You have to like adjust to day trading. So in the next episode, what I'll be doing is that I'm going to be showing you how to enter this particular market, right? So I've done for USD JPY before. If you check my previous episode, right? I've done for USD JPY and USD JPY is moving smoothly. Just check the previous episode. So I'm going to be creating a playlist for this, and the playlist, just go to my playlist. You see for chart approach, and you'll be able to watch my previous videos on this particular pair. Right now, for those of you that are like complete beginner or you are still trading, especially for those of you that are trading price action, or probably you do not have any idea about the forex market, right? And you want me to show you one-on-one, you want me to teach you one-on-one, you are tired of all this group mentorship, you are tired of paying for 1 month mentorship that you will not be able to learn anything. Reach out to me using the first link in the description. This is a paid mentorship, right? Reach out to me for only serious-minded persons. And for those of you that are probably you're a complete beginner, you just want to see this is something you want to do, you can also use there's a link in the description whereby you can access my free 1 month training. Use that link to reach out to me, and I will be sending you the link whereby you can access my free 1 month mentorship training, right? So with all this being said, I've come to the end of this particular video. And now listen, if you want to become a profitable forex trader, make sure you subscribe. If this year is your year as a forex trader, you want to become profitable, subscribe to this YouTube channel now. That's to notify that yes, you are serious to become profitable this year, and God will help you become profitable, and you not just become profitable, you also become a successful forex trader this year. Subscribe to this YouTube channel. Thanks for watching. I'll see you in my next video. Bye for now.